it. Here to talk about that and why he thinks things could get more choppy in Washington in the coming months is Tobin, head of U.S. policy and politics at Wolfe Research. And I think, Tobin, that's where the market is focused. You have a bit of a warning in here based on what you're seeing that, the debt ceiling, shutdown fight in March, and obviously passing the extension of the tax cuts. Why do you think those look a little more uncertain now?
Well, look, I mean, all the fiscal negotiations that are going to require bipartisanship, certainly keeping the government open, possibly raising the debt ceiling, depending on whether or not Republicans include that in reconciliation, have gotten more complicated in light of the DOGE effort. I mean, in broad strokes, if you have the administration reserving the right to unilaterally cut spending that Congress has appropriated, it becomes hard to figure out what a deal among congressional appropriators could look like. What is the benefit for Democrats of bargaining on those spending levels if the administration is going to turn around and cut that spending? So, that makes it really hard to figure out how Congress can handle some of those bipartisan items right now. So
let's talk a little more specifically about this. There are some on the right who think that DOGE isn't really going far enough to make meaningful change. There are many who are now worried that, all of the unforeseen consequence, bringing back the nuclear researchers and trying to track them down, like all of these different areas have gone too far. So from your point of view, from an investor point of view, how would you assess what's been done?
So, I mean, look, I think that from the federal workforce perspective, certainly we are seeing them go very far, very fast. I think they're taking kind of a slash and burn approach to agencies that they really don't like the mission of, like USAID. But when you look, sort of beyond those easy targets, I think it does get a lot harder to figure out whether or not there's going to be meaningful spending cuts driven. In defense, I think is sort of the clearest example. They've talked about going after hundreds of billions of dollars of waste, fraud, and abuse in the Defense Department. I think no one doubts that there is waste in defense procurement. But at the same time, you have Republicans in Congress trying to increase defense spending by $100 or $150 billion over the next few years. So clearly the pie is not going to shrink. The question for investors is going to be, are your particular projects on the chopping block?
What do you see? So as you've mentioned, and we've talked about, we'll talk more next hour, the increase in jobless claims in the D.C. area. There's obviously a few signs that the workforce cuts are having an impact. But is all of this enough to have a deficit impact as far as you're concerned? When we look at the level of the 10-year, we heard Lael Brainerd saying so much, she's a little bit skeptical of that this morning.
Yeah, I think not really. We're running a deficit close to $2 trillion, cutting the federal workforce by 10% or about 250,000 people, which I think they are realistically on track for. That's $30 billion with a B dollar savings per year. That's a lot of money in a vacuum. That's worth doing for taxpayers if you think that those are dispensable functions. But that's not going to get us close to closing the deficit. You need to go much farther. And realistically, you need to touch entitlements. And that's why Medicaid is on the table in these reconciliation negotiations in Congress.
Yeah, I mean, think of entitlement, you sort of think, okay, well, Medicaid is more of a program to kind of low income. It expanded massively under the Biden administration. Even going back to the Obama administration, Tobin, it's hard for me to keep up. Now that it's become so big, and when you look at the biggest drivers of increased spending now versus pre-pandemic, Medicaid is the biggie. So what cuts should we realistically expect to happen, and how big of an effect will that have?
So it's a huge ongoing debate. Conservatives want to go farther. We're starting to see moderates get squeamish on the sort of center wing of the Republican Party. Right now, they have an $880 billion number in the reconciliation instructions in the House budget resolution. We'll see if that sticks. If they do end up with that kind of number, you'd be looking at quite significant long-term reform. I think the cuts are probably going to be backloaded. We're not going to see hospital reimbursements slashed right away. We're not going to see covered lives reduced right away. But as you look into the future, get into 2030, 32, 34, you could be looking at 20% cuts to federal spending on Medicaid.
Right. But again, you see the narrative shaping up. Brainerd said it this morning, extend tax cuts on the back of Medicaid cuts. Is that why you think this is going to be such a difficult fight?
Yeah, Democrats love running against that kind of Republican fiscal bill where you're looking at high-end tax cuts as well as cuts to benefits for lower-income people. There are many successful Democratic campaigns run on the basis in the past. Trump seems to be somewhat nervous about the politics of that. Again, moderates in Congress are nervous. But conservatives see this as their one kind of big chance to make progress. And to the extent that there's any seriousness about these spending reduction goals, whether it's from DOGE or House conservatives or anyone else, Medicaid really has to be part of the mix if you're going to do something real there.